And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show, the show where we put you in front of where the action is in the broader markets. And certainly the markets were flat to down, but don't let that fool you. There's a lot of shuffling taking place. So we're going to cover that. And as always, with an eye toward helping you prepare not only for next week, but for beyond. So the agenda today, we are going to go ahead as usual, take a look at where the markets are and potentially going forward, where they may lead. Also, the yield curve is steepening. We're seeing the 30-year Treasury bond yield really picking up. We're going to talk about that and then the impact where that may be impacting the markets. Also, global recovery hopes are running high. So we did see a very pronounced move into recovery areas. I'm going to share that with you, as well as some individual stocks. And then how to play the pullbacks. We did get a pullback this week, certain groups more than other, and you want to know whether that stock is just pulling back or is there more in the way of downside ahead. Let's take a look. I like to share some of the backdrop as far as activity economically that took place this week. Monday, early in the week, Tuesday actually, shortened week, we did see retail sales. They jumped 5.3% in January. A lot of that to do with stimulus monies, but also a move as far as consumers coming back into the fray, if you will. January, we did see industrial production rise 0.9%, and that is yet another industrial production increase, pointing toward an economic recovery as we see parts of that area pick up. Producer prices. Now, this is everything to do with that increase in interest rates. We are seeing prices increase. There is a fear that inflation is going to descend upon us sooner than later. So that was certainly news that took hold last week. Also, home builder confidence was up in February, and we did get new home sales numbers today that were bullish. So that's still a vibrant area of the economy. And then weekless jobless claims, unfortunately, that was on Thursday. They did rather surge unexpectedly. So that was not particularly positive news, but it definitely needed to be mentioned because that did put help in the way of putting the pause button as far as the broader market's recent strength and rally. So let's get started here. We are looking at a daily chart of the S&P 500, and I note here that it remains in an uptrend. I'm going to be paying attention to the position of the S&P relative to these shorter-term simple moving averages. So we did slightly undercut that 10-day this week, but you can see that overall our outside momentum indicators are generally positive, but we are going to be on the lookout for potentially more in the way of a pause or more as far as these markets. So for me, I am not jumping in with 2 feet as far as the markets, but they certainly do look constructive as it relates to going into the close today. So from here, as always, let's go ahead, pull the curtain back and get a feel for what's underneath the markets. Talked about shuffling as far as sectors. So we're looking at what is called a candle glance view. This is a 2-month daily price chart of the 11 underlying sectors within the S&P. So from here, I add that RSI, that's that relative strength indicator. I want to sort these sectors by descending. I want to see where the relative strength is, because as always, this is where we want to be positioned to take advantage of that strength. And then also potentially uncover shifts. So let's take a look. Those of you that follow my show weekly, welcome back. But I did want to highlight an area that I have been talking about for quite some time here, and that is financials. XLF is the ticker symbol. Really confirmed uptrend over the past 3 weeks here. In the next segment, I'll share with you one of the primary drivers, but this is an area with my MEM Edge report we have been all over. We did initially get back into financials and bank stocks back here in November, and we've been hanging on for that nice uptrend. So from here, let's go ahead and take a look, because energy is another area that I have been talking about quite a bit. Again, another area with my MEM Edge report that we did get back in here in November as these oil stocks turned positive, still trending upward. I'm thinking that you are potentially seeing a theme here with financials, energy. I'm going to just skip over this for now, but let's take a look. Industrials, they have had certainly a reawakening of sorts, and they are breaking out to a new high today, up 1.6% in a market that was flat to down. So very constructive, all about earnings. We're seeing good numbers come up, but even more importantly, in broader picture, it is all about the potential for a global economic recovery. So as we drill down, we can take a look at some areas as far as sectors that you might find surprising that are now in this middling area, and that is technology. Technology had a tough week, down almost 2%. But if we were to look at it from an overall view, tech really has been a leadership group. But this is that shift that I mentioned to you, that we are seeing a little bit of a pullback in select areas of technology. Of course, when you are looking at sectors, you're going to want to be aware of the heavier weighted stocks in that grouping. And with XLK, Apple is a very heavy weighting, as it is for the broader markets. Apple down 4% this week. So that's going to be part of the impact that we are seeing there. And then as we drill down, certainly no surprise in these low liars here as it relates to certainly more defensive areas. So from here, what I like to do is then take us to even further as far as refining your sense of where that strength is beyond the broader sectors. So here I'm going to share with you select industry groupings and then also really key metrics. So we do have the broader market indices. I also have biotech in here, the regional bank ETF KRE, and then Brent. We're going to want to see where the price of oil is. In addition to a recovery, a lot of these energy stocks are performing well because the price of oil managed to bump up above that $60 level. Very bullish. Gold, not necessarily of interest here, but I put it in. IGV is a software ETF, and then semiconductors, and again, RSI, and then descending. So let's take a quick look, because I'm going to refine this a bit further for you. But up here in the forefront, this is the chart daily of the yield on that 10-year treasury, and take a look. This is just downright explosive, really, when it comes to looking at yields. You're not going to see moves of this magnitude very often. And again, it's all about that inflation trade and the move into treasuries. I'm going to expand upon that a little bit more because it does bear a closer look. If we do get interest rates, yields on these treasuries that get a little too high, at some point you will see a negative impact on the equity markets. Brent, we talked about oil prices, and they did close the week at 63, although it did pull back today. We are hearing noises in the way of oil production increases, Saudi Arabia and elsewhere. So at some point in time, it could impact energy stocks. But for now, those stocks are very much in an uptrend as it relates to oil. KRE, this is that regional banking ETF, and all about interest rates. As interest rates increase, banking stocks will benefit. It's also a recovery play in the sense that the lending activity pre-pandemic, there was a lot of fear that there would be defaults. They really were able to stem that, and we are now entering into more of a recovery phase. Software stocks, they were down a little bit more than the markets, but still in a nice uptrend. This is certainly worth noting, the fact that biotech stocks did in fact get hit this week, down a little more than 2.5%. 5%, but we're still in good standing. It's just a case of a overheated group that is pulling back. We did have that period here in late December. And then, of course, we were able to advance out of that because these biotechs are really innovative as far as their products and what they are putting out there. But we're going to keep a close eye on that because biotech stocks are riskier. We want to pay attention. Is the risk appetite decreasing? So that's a look at the markets as far as sectors and then sub-industry groups. I'm going to share with you a couple of other charts that will shine a little more in the way of light onto what is happening again beneath the surface of the markets. So I mentioned to you treasury yields. And this is what's called a perf chart from StockCharts.com. And very simply, I've just plotted the 30-year, the yield on the 30-year, and that is in red. The 10-year treasury yield is in blue. But really what I wanted to point out to you is this widening as far as the differential between these two. And it's really just underscoring and highlighting really just this big move that we've had here. Actually, well, this will suffice. So that is something that I did want to point out to you. And then also I talked to you, I'm not sure if I did mention this, but this concept that the recovery play, and that would take us toward what are called value stocks, of course. And VTV, as it relates to ETFs, is the value stock ETF for Vanguard, and VUG is growth stocks. So the blue is the blue is the value, and the red is the growth. So really, I'm just showing, I'm taking us back to the beginning of this month, and I did want to highlight this move into value that is taking place certainly this week. We did pull back a little bit toward the end of this week, but by and large, this is a way to visualize that shift that we are seeing into value stocks. So from here, we are going to go ahead and take it a step further as far as taking a look at some of these value stocks, because it is an area that I mentioned to you. There were stocks that reported this week. So let's just take a look at one name among several that really caught people's attention today. Of course, this is Deere, ticker symbol DE, and they are very much entrenched in the agricultural space, a bellwether value stock. And let's take a minute. Well, what I did want to point out to you is this base breakout to new highs on very big volume. And I want to see if I can capture that. Well, we can see here, but really most important from my work is this really big volume that we saw. Stock was up almost 10% in an otherwise flat market. And so it does point to their surprisingly strong earnings report, but more importantly, and this is what we've seen throughout the earnings season this quarter, is if a company if management guides higher going forward, that can be even more bullish than positive numbers. And management did just that. Their outlook for this year is very bullish, even into next year. Of course, the with the farming industry, the inflation that we talked about, prices are going up for goods, including food, and Deere is already seeing these agricultural facilities increase their budgets for equipment. And Deere also has turned the corner as far as being very technologically advanced in their offerings outside of just equipment. So that was one name that I certainly wanted to share with you. DOW, bellwether, other chemical name, Dow, and we can see that that also had a pretty big move, up 5%. I'm going to keep an eye on this one. I want to see if we can achieve that nice base breakout. Volume's pretty good, but your outside momentum indicators are constructive. And a couple of other names that we can look at. This is a real proxy for a global economic recovery, and that is Caterpillar. And we can see this is another stock that had that nice base breakout on very big volume. So really getting a sense, because a lot of this too is not just recovery related. You're seeing strong earnings. They are seeing a pickup in demand. So that base breakout, big volume. So it is, there is a sense that this move into these cyclical global recovery stocks does potentially have more in the way of legs, and we could see a little more in the way of upside. I'm going to take us a very brief break here. When we get back, we're going to look at another area that has really seen a pronounced shift into that, and then select stocks. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. So I'm looking here at the front initial interface page for StockCharts.com. And an exercise that can be really quite helpful is to take a look. For instance, this sector summary here today really was as I talk about, a pronounced move, but this is where we saw that shift today. Industrials, I can tell you, I have my midweek report for my MEM Edge report. And as of midweek, industrials were actually down for the week, but then they managed to rally and close up 0.8%. So in the face of a flat and negative market, that is very constructive. So let's just take a minute, and I'll share with you one of the many ways that you can drill down and take a look at the underlying stock. So we're going to go to the sector summary here. What you can do is sort it. Well, intraday is absolutely just fine. And I'm going to take us in behind the scenes, if you will. And we're going to take a look at some of those areas for the week that actually outperformed. And take a look, airlines up here in the forefront. I did a show yesterday with Aaron, Chartwise Women, and we talked about this recovery play that was more than economic. It's the sense that people are going to become and are becoming more mobile with the rollout of the vaccine. So what we can do from here is take a look at this scooter. I'll share with you a couple of names that stand out from my work. I'll share two stocks that look interesting. These stocks, these airline stocks, had definite earlier periods of rally attempts. Same with this. This is post-vaccine, November 9th, that vaccine announcement came back in, but this could be a little more in the way of sustainable. We had, for instance, Delta Airlines, DAL. We're having that nice base breakout today. Your moving average, convergence, divergence, momentum indicator turning positive, and then that nice positive RSI. Now, the thing to keep in mind, however, is that certainly gasoline, fuel, jet gas prices are going up in light of crude oil. So that could be a headwind, but at this point, they are looking very interesting. Let's take a look at another stock in this airline industry space. Delta Airlines, of course, is renowned for that middle seat, keeping that empty. That has travelers migrating toward there. JetBlue is another stock, certainly airline. JBLU had this nice base breakout on earnings. They actually came out with earnings down here, but since this group has come into favor, it's in a very nice confirmed uptrend. RSI, MACD positive. This company did announce a great reduction in their economy fare. They know that that is, just share one last one that is renowned for their economy, and you'll see that it's very much in a confirmed uptrend. Spirit Airlines, SAVE, so JetBlue trying to get a piece of that conscious as far as money conscious traveler. So that is an area that and how you can get in front of names as far as within industrials. See if we can take us back. And from here, what I did want to go ahead and do is share with you that concept of stocks as they pull back and what you are going to want to be on the lookout for. So a couple of examples here, names that are attractive on their pullback as opposed to stocks that have more work. So let's take a look at a stock that is a retailer as far as the leisure athletic wear. This is Under Armour UA. And the stock came out with nice numbers. It did enter into this nice uptrend. Let's take a look. More recently, this beginning of this week, it pulled back very orderly to this 10-day simple moving average. And we can get a sense that the stock has found support. It could have more in the way of potential upside. The only concern is that it is a little bit overbought, but that is what I would call a nice orderly pullback. Let's take a look at another example of a stock that had a significant run, but then did pull back. It's certainly not the prettiest of charts. It's ALLT, but we did have that explosive move up to new highs. Again, a nice orderly pullback to that 10-day simple moving average. And so I would argue that that is very constructive. The stock did, the RSI came in a little, and we could be poised for further upside. Let's see if we can share a couple of other names as far as what you are going to want to be on the lookout for. This is Bill.com, a small cap software, back office software stock for small companies. And a couple of examples here as it relates to a pullback. This is a big winner for us on our MEM Edge report. We did get shaken out here when it broke below that 50-day, but here is what you want to be on the lookout for as it relates. There's two really primary examples here with Bill that are very, I think, constructive and helpful, because here we had a pullback here in this October period as well. And what you want to be on the lookout for as far as that downtrend reversal is a MACD crossover into positive territory. And then likewise, you want to have your other momentum indicator trending positively after the price breaks back above this their shorter term simple moving averages. It did occur again here. So now we did have this nice break up here, a nice move higher in response to very strong earnings. And it did pull back to this upward trending 10-day simple moving average, which I would argue historically can be quite bullish for further upside. From here, we can take a look at some stocks that did pull back, but are not looking certainly as constructive. I would argue they have more work. PCAR, and we can see that the stock here more recently attempted to approach this prior high and pulled back. Now the stock is down below these moving averages, so I would need it to break back above before turning more constructive. We did see a pullback in alternative energy stocks this week, a lot of high-flying names there. This is an example, smaller name, but it's REGI, Renewable Energy Group. And again, the pullback has pushed the stock below what I would call support, below this 21, that is, the 21 simple moving average. And we can also see that that RSI dipped into negative territory. So I would argue, as I mentioned, it has a little more work to do before resuming that uptrend. From here, I'm going to share with you stocks that pulled back that don't look constructive. They look to be more than a pullback. This is Fastly, FSLY, a software stock, and we can see from my work when a stock breaks below this red 50-day simple moving average, and you can marry that with a negative RSI and MACD, oftentimes there is further downside ahead. Also, we did see a pickup in volume on that selling, and it's just clinging to that 200. It'll be interesting to see if it's able to hold that area. Let's take a look at another stock that looks to be more than a potential pullback, and that's Peloton. We were looking at this stock last week as a potential reversal. It did not hold. The stock, let's see what we are looking at as far as, down 9% on the week, and it did break below that 50-day simple moving average. Now that RSI and the MACD are in negative territory. And then one last example of something potentially more than a pullback, we're looking at advanced micro devices, AMD. And one of the reasons I'm pointing this out is because in addition to breaking below key support here, the stock also is not participating in the group upward movement. So I'm going to pull up the semiconductor industry group. It's been in a very confirmed uptrend. Those of you subscribers to my MEM Edge report, you'll know we've been talking for some time about that semiconductor chip shortage. So a lot of demand amid reduced supply. So if you are looking at a stock, you want to see how is that group doing. AMD has not participated in the rally, and it is continuing to underperform. So I would argue more than just a pullback, potential more downside ahead. So I did want to talk a little bit more and share with you some names that have come into play this week. And again, it's all about that recovery possibility, the fact that people will get out and about more, potentially being more mobile. So one area that has picked up this week, many of you may know, are these cruise ships. So we can see that Carnival Cruise is had a very strong week. So I would look for a pullback, but it did have that nice base breakout on volume. And the other characteristic here is that this MACD is just starting to reverse this lengthy downtrend. Your RSI is now a little bit overbought, but certainly one to keep an eye on. Again, this is another area that we've seen these recovery attempts, but we may be closer as far as to these this is a nice orderly base breakout, looks quite attractive. Let's take a look at some of these hotel stocks that have also had a nice week on the heels of recovery. This is Marriott Vacations Worldwide, VAC. Now this is a big move, this 5.5% move today. So in essence, it's more about the dynamics as far as the movement and the volume characteristics. I just added an additional 5-day simple moving average, but we did get a nice base breakout on today's move on big volume. I'd be more interested in this stock on a potential pullback. Hilton is another one. They did come out with numbers, but most importantly with this stock, HLT, is the concept that management guided higher. They're very bullish as they are beginning to see their occupancy rates are higher. Another nice base breakout, and then the beginning here as far as the MACD just now beginning to turn positive. And one other area that that will also participate in a recovery among occupancy and hotels is a REIT stock, RLJ, and it is a REIT stock with a portfolio of hotels. So we can see this nice base breakout again, very similar dynamics, that RSI, MACD up there trending positively. I'm going to leave it at that. Please use that link below. Take a 4-week trial of my MEM Edge report for $7. You'll get a lot more in the way of insight and stocks. Have a great weekend, everybody.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.